Hello, this is Dr. Paul Cottrell, and I'd like to go over the updates of the market and different asset classes. I'm recording this on January 4th, 2026, and I'd like to go over the store before we go over the details on the market. Please go to my store, the-studio-reykjavik.com. All the videos that I do are for free. Please help support the work that I do by donating. You can donate through Stripe, PayPal, or buy me a coffee on the bottom of the homepage. Just click the links. That will take you to a page that will allow you to donate. Please donate. All these videos are for free. You can also take a look at my audio podcasts. You can download them or listen to them. You can also see my live streams under live. And I have a new feature called Paper, where you get top news generated and you can read those articles about the news that's happening for the day. I also have classes that you can sign up for, uh, class modules on pulmonology and immunology under store classes. You can learn about pulmonology and immunology for only $25. You get lots of PDFs and lots of videos. You can log in as many times as you want to watch those lectures. You can also get ebooks on my store. You can get ebooks about finance, genomics, artificial intelligence, and endocrinology. And I also have lots of different supplements. I have structural nanosilver supplements, toothpaste, Max 35, and Cleanse are available on the store that will help to boost up your immune system. The gels will help to heal your skin, improve the health of your skin, and the structural nanosilver gel will help to neutralize, especially during the cold season. Structural nanosilver soaps, you can get them in charcoal tea tree, lemongrass, peppermint, and lavender. They will help to neutralize and improve the health of your skin. Structural nanosilver drops, very important to take during the winter season. You can get them in blueberry, honey, and lemon and cherry flavor. Cleanse is a 30 parts per million, max 35 to 35 parts per million. And it's another supplement that you can take to boost up your immune system. The complete multivitamin has the multivitamins that you need for proper enzymatic activity shown on the screen here. It's a comprehensive multivitamin, easy to digest, and it's part of the anti-aging protocol. In addition, C60 is 1,000 times stronger than vitamin C. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. You can get it in extra virgin olive oil, avocado oil, and MCT coconut oil. This will soak up free radicals and slow down the aging process. Boomer products, I have vitamin D3 that will help to get cells to go into apoptosis, especially if they're infected. It also helps with gene expression and helps to build bone density. Vitamin C and magnesium helps to increase your health of your skin, your brain function, and boost up that immune system. Omega-3 will help with your cardiovascular health. Ashwagandha root will control your blood glucose levels and cortisol levels. Good night formula will help you to get into those cycles of REM sleep and deep sleep to consolidate your memory and detoxify your central nervous system. As tryptophan, melatonin, GABA, and passion flower. Probiotics are important to improve your gut biome, your immune system, your skin health, your metabolism. Very important to take every day. Resveratrol will help to improve your youthful gene expression and improve the basal layer of your skin, soak up free radicals, and boost up your ATP and the health of your mitochondria. Vitamin B complex will also help to boost up that mitochondrial health, increase ATP levels, rev up your metabolism, and protect your neurons. Turmeric will bring down inflammation and soak up free radicals. Magnesium and zinc will boost up that immune system and brain function. Lignans will help with your immune system and endocrine system. Collagen will help with your joint health, your skin, your nails, your hair. your musculature, and your bone density. Digestive enzyme complex will help to digest your foods, break up carbohydrates, proteins, and lipids. Clarity factor will allow you to concentrate and get rid of that brain fog. And over time, you'll have better neuroplasticity. You'll be able to think faster and have better memory. Olive leaf extract is a dual purpose product. It'll bring down inflammation and soak up free radicals. This will help with your cardiovascular health and your immune system. Zeolite will help to detoxify your body, get rid of heavy metals, toxins, and chemicals. Myotrol will help to express the genes that you need to maintain muscle mass and build muscle. It has polyphenols, flavonoids, and lignans. Boomer Boost will help to improve your brain function, your cardiovascular health, your musculature, rev up your metabolism, and increase your energy levels. Gladiator barley will help to build strength, bring down inflammation, soak up free radicals, and detoxify your body. Heirloom barley will detoxify your body, bring down inflammation, and soak up free radicals. Collagen is a new product that I have. Collagen you take every day to help to restore your joints. It focuses on restoring the structure of the joint and also managing the pain pathway. So pain will be reduced and your joints will start to be rejuvenated. Now, the the revitalization is coming from the type 2 collagen and the ACAN to help to build that joint and the cartilage in that joint. Now, in terms of inflammation, chronic inflammation will lead to chronic pain. And what will happen is that you'll have certain enzymes that aren't working properly because of this high inflammation. If you reduce that inflammation, you'll have less joint destruction. Now, so we have some pillars here on how the collagen works. You have a rebuild the foundation, silence pain and stop destruction, and the biodelivery advantage. In terms of rebuilding the foundation, you are rebuilding the type 2 collagen, and you're also rebuilding the ACAN for cushioning. Now, for silencing the pain and stop the destruction, you want to bring down that inflammation. All right. So it manages the pain channel gatekeeper NAV 1.7. So it corrects the defective channels that send chronic false pain signals from joints to the brain, and then it halts this joint rust by MMP3 and MMP13. So it suppresses the primary enzymes responsible for destroying existing collagen and fueling inflammation. So it's bringing down that inflammation and it's suppressing these enzymes that are destroying your collagen. Now, by activating certain transports, you'll be able to help to repair the cartilage. So collagen will help to activate the glycosamine transport, and that will facilitate the optimal delivery of glucosamine directly into the cartilage cells for repair, and it ensures chondroitin utilization. So it helps the joint infrastructure effectively use chondroitin and maximize its cushioning effect. All right, so that's how it basically works. So the benefits of taking collagen, I should say, collagen is restores the joint cushioning and hydraulic capacity, and it enhances the mobility. It helps with pain management, and it also helps with the prevention and maintenance of joints and joint health. Okay, so that's collagen. Now, in terms of the other new product I have, it's called Super Strong Relief, and this is a topical application where if you have some pain, it will help to relieve it. It's for minor aches and discomfort. So it will help with simple backache due to, let's say, muscle aches. Arthritis, it will help strains, sprains, bruises, and pulls. So it's a great way to kind of relieve that pain. And if it's more related to joints, joint um, health, then you want to take the collagen. Now, collagen and collagen can work together to help rebuild the joint. So super strong relief helps to reduce the pain. The collagen helps to rebuild the joint. So take a look at those great products that I offer. And I have deodorants in citrus and peppermint, lavender and tea tree. They are dual purpose. You use them as a deodorant and they will help to detoxify your body. They're for males and females. And lastly, I have a bunch of different boxes that are curated that will help with anti-aging, also help to boost up your immune system and for longevity. So take a look at those different boxes. They're cheaper to buy the anti-aging boxes or the longevity boxes because I package different products within them at a lower price point than if you bought them separately. So there is an advantage to buying an anti-aging box or a longevity box. So those are the great products that I offer. Please go to my store, the-studio-reykjavik.com, and get those great products. Now, with that said, let's start going over the markets. Okay. All right. So let's start with Bitcoin. Bitcoin is having some problems. All right. Here is a chart that shows the high point at about 127,000 for a coin, and then it started to sell off, and that took place in October, all right, of last year. And it's been selling off and been having a hard time. It's in the last few trading sessions, it has been going slightly up, and now it's trading at 90,000. Now, to keep in mind here, we have a support level at the 78% retracement. That's from the 74 to the 127K level. All right. So there's a support level there. You can see that the trading that was taking place in December was just kind of hovering over the 78% retracement. So 85 is a support level. And the next resistance level is going to be 94,500 or so. So around 95,000 is the resistance level. So pay attention to that. There probably will be a trading range between 85 to 95. Okay, next. SPY. This is the ETF for the S&P 500. Now, we came close to hitting 700 in December for SPY. It peaked at 691, so that's around 6,910 for the S&P 500. So what we have right now for the near-term resistance level will be 700. The support level, there's a few support levels here. The first support level will be at about 680, and we're close to that. And then we have a support level at 660, but we have a strong support level at the 23% retracement, which is at 643. So you have 680 as a support level, a much stronger support level at 600, and a very strong support level at 643. Near-term resistance is 700, Now the question is with what's going on internationally, maybe what's going on with oil going into the first quarter this year. Will this start to just sideways trade and just trade, between maybe 675 to about 690 and just kind of just trade sideways for a little while? That might happen before there's a big upward movement. Now, I don't have a target for year end for 2026 yet. If we want to say that it's going to be bullish, we may hit 7,800, maybe 7,800 for the S&P 500. In terms of SPY, that would be 780. In terms of maybe a more less bullish case, we may see SPY being at year end at maybe 740, but it's a little too early to tell. I'm a little concerned that maybe it'll be sideways trading and then slightly drift downward, kind of similar to the dynamic that we saw here back in a year ago, where you started seeing sideways, and then it started to go down. But this was when Trump started to signal that there was going to be tariffs, and then in April 2nd, he announced the actual tariff move, and then it started to mean revert, and everyone was buying the dip, and then it started to climb. But I'm concerned that the next couple weeks or so, within January, we're going to see some sort of sideways trading and it may start to drift down. But we should see tax relief based on the bill that was passed last year. So people should have some extra money in their pocket after they file their taxes, and that will start to help the market and move upward. So I think near term, probably sideways trading, and then money comes into households and they'll start spending it, and we'll start moving past the 700 mark for the S&P 500, or for, the 700 mark for SPY, which represents the S&P 500. Okay. Now, Boyle is a ETF for natural gas. And let's go over natural gas first, and then we'll come back to Boyle. So natural gas futures are trading right now at about 3.6. All right. And it's volatile. You can see that it's going up and down. It was trading in September of last year at 2.6. Well, actually August, and went as high as 4.49. I'm sorry, 5.49, and then started to go back down. All right. So there was a lot of activity. All right. Now, and these candles are pretty big. So there's some movement going on with natural gas in the context of artificial intelligence and the need for energy. Natural gas should be going up in terms of energy usage. Now, we do have quite a bit of natural gas in the United States, especially from fracking. So we have a large supply, but there is an increased usage. And if industry starts to improve, the economy starts to improve on top of artificial intelligence computation, we should see natural gas futures tick up higher than normal. So, but right now there has been kind of a sell-off that's been taking place. Now, part of that is energy costs are being suppressed. There's lots of oil that's out on the market, and that may actually, the whole energy sector may be having some suppressed prices in the futures market. Okay, so it's trading at 3.64. So in terms of support levels, all right, so if we do a fib sequence between 2.6 to 5.49, what we have here is that it's trading at below the 61% retracement. Now, if you kind of just to validate this, if you take these 2 points, you can tell that as it was breaking through the 20 3% retracement and the 38% retracement, right? And blew through the 50% retracement. You can tell that like this candle right here, it stopped right at the 50, came up and then came back down and broke. So it was fighting that support level, broke through, and then several trading days, it wasn't able to touch the 61% retracement. So that was a strong support level. Then it came back up and then passed through the 50 and then was fighting the 38% retracement and fell back down. So what we're seeing here is that 38% retracement is probably a very strong resistance level. And so that puts us in about 4.4, just below 4.5 as a resistance level for natural gas. And right now it's trading below the 61% retracement, but I suspect that it will try to break back up and trade in a certain range. Okay, so what does this mean? Right now it's at 3.6. We have a short-term resistance level at 3.72. We have a much we have a short-term support level of 3.72, and we have a support level at 4.06. All right, and a very strong, I'm sorry, not resistance level, not support level. I should have said resistance level. Let me rephrase this. I apologize. So we're trading at 3.641. We have a resistance level short term at 3.7. The medium term, we have a 4.06 resistance level and a very strong resistance level at 4.4, almost 4.5. All right. So to break the 3.7 resistance level, pretty easy. To break the 4.06 level, a little bit harder to break it. It's going to take quite a bit of effort to break the 4.5 resistance level. All right. In terms of support, all right, there's a strong support, very strong support level at 3.2. All right. But you can see this gap jump here. It started, right, just below 3.5. So another support level here, a strong support level should be 3.5. So near-term support level, 3.5. Near-term resistance level, 3.75. Okay. But we had two big downdrafts. Now, again, this was near the end of the year. There wasn't that much in terms of volume. Volume starts to dive down at the in the end of the year. So that might have something to do with it. We still have January and February as cold months for the year. And we have instability in Iran starting to peak up. Venezuela may actually affect the energy markets, positive or negative. We're not sure yet. So just pay attention. There may be some movements, negative or positive, in terms of natural gas. It's sold off quite a bit, but it's still, it because of artificial intelligence needing energy, there should be a bid up in natural gas. So, with that said, support level at 3.5, resistance level at 3.75. All right, so with that, how does it translate into BOIL, which is longing natural gas, which is a leveraged ETF? All right, so ETFs have uh, volatility decay, all right, and leverage decay, especially if it's a leveraged ETF. All right, so we want to zoom in here to what was been going on near the end of the year, all right, in December. Okay. So we were decent. We were at about 40, maybe 46 or something like that right here. And then it started to sell off for Boyle. All right. And then came back up and then came back down. All right. So if we take a 1 year chart, the high point of the ETF was at 109.77. And it went as low as 21.03. So if natural gas goes closer to 3.5, then we're going to see that this is going to break. 21.6 is going to break. Now, so right now we have a support level at about 20. Resistance level is going to be at about 25. So so near term. So if we go to, let's say, natural gas closer to 4 point, if you remember, we have a support level or a resistance level at 4.06. So if we get past the 3.7 and we start inching towards the 4.06, all right, for natural gas, then that would mean that Boyle will start to move up. I'm sorry. Boyle will start to move up and test this high point right here. All right. So we're looking at, maybe 26, 27. All right. But if it goes down, it's going to break the 20. So 20 is a support level, and around 25 is a resistance level near term. Okay. So that's how it's going to play it. So if natural gas goes up, Boyle will go up. Natural gas starts to go down, Boyle will go down. But again, the price action is quick. I mean, it can move pretty quick with these leverage ETFs. Okay. The belly of the curve for the Treasury. This is the 7 to 10 year Treasury. So if the price of the bond goes up, then this ETF goes up and the yields of the bonds go down. All right. So if bond prices go up, this ETF will go up. Now we have it's been trading at 25.38. So if yields start to go down below, at four for the 10 year or below with a 3.9 handle, then this ETF will go up. All right. And if that does, you're probably looking at maybe this ETF looking at closer to 26. Now, what I've been noticing is that yields actually have been creeping up a little bit. So before we do that, let's just make sure I'm going through everything. Okay, so this chart here is an overlay of the 30-year bond yield, the 10-year bond yield, and the Federal Reserve funds rate. All right, now we've been reducing, the Federal Reserve has been reducing the rate, lowering the rate. So that's what the staircase is. And typically when you have the federal funds rate going down, in theory, you should be seeing the whole yield curve shifting down, but that's not what we're seeing. Okay. Here they were raising and the yields were going up. They stayed steady and it kind of went up and then down and up. All right. And then it started to go down and then it started to creep back up again. All right. And then it was steady and it was kind of up and down, but sideways. And then once we started to go back down again, it's just sideways or slightly moving upward. All right. So it's not really responding. Now, what's interesting here is that when the federal funds rate was increasing and the yields were also increasing for the 10 and 20, the spread, the space between the 30 and the 10 were going down. And the spreads were pretty tight as the Federal Reserve held. But as they started to bring down the federal funds rate, it started to creep up the yield or the spread. between the 30-year and the 10-year yield. And you can see it spreading out here. All right. So what this is basically meaning is that the front of the curve, like the 1 year, 2 year, or even 30-day or overnight rates are going down, and the yields on the other end of the curve, the 10 and the 30-year, they're moving up. So the curve is steepening. So that's what this is happening. What's happening is the curve is steepening here. Now, that may, if you take a look at, let's say if you take a look at what was going on in 2024, all right, it was coming down. The 10-year, it was trading at 4.8 and it was starting to come down and it's now trading at 4.1. The 30-year didn't trade, it was trading at, 4.9, about 4.9. And guess what? It's trading at 4.8, so it didn't go down that much over that year. So the 30-year is staying relatively stable. Other bonds like the UK, the France, Germany, they're having some difficulty in their bond markets and yields are going up. So even with the federal funds rate going down, we don't see yield spreads coming in. They're actually moving upward between the 30 and the 10. And I think part of that is that the 30 is relatively locked. It's not moving much, right? And the 10 has moved more and it moved down. So 10-year funding has cheapened. 30-year funding has been somewhat flat, hasn't changed much. And therefore the spreads have increased. So with that said, the belly of the curve, there's some movement. If we continue to have this downward movement that we had throughout 2024 into 2020, I'm sorry, 2025 into 2026, then we should have we should have this ETF here start to go up. So basically, if we see in 2025, right? If we see in 2025 this downward movement going into 2026, because this is basically a weekly chart, so we don't have really weak data for 2026 yet. It's just started. But in 2025, we had this movement coming down, right? In 2025, we had this movement coming down for the 10-year. If it continues to come down, an overall trend, then we should see the belly of the curve for this ETF to start drifting up. All right. And it should be, moving a little bit, but it doesn't move a lot. It moves a little bit. So we're talking about, maybe getting closer to 26 if we have the 10-year breaking 4 and being at the maybe 3.9 handle. I'm surprised that it's not there already. Like for example, some people were talking, well, when the Federal Reserve lowers rates, then the 10-year will break 4. Well, it got really close and it didn't break, and it didn't have a 3.9 handle. And the Federal Reserve lowered rates again, and it just kind of drifted up again. So 4 is a resistance level for the yield for the 10-year. Well, 4 is a resistance level for the yield for the 10-year, then we will see that it's really hard. It's going to be really hard to get to 26. 26 is kind of is 26, or this 23% retracement on the fib sequence. 26.13 is a resistance level. And that resistance level corresponds to this 4. So if we get back down closer to 4, then this should come closer to 26. All right. But it isn't. So it's kind of drifting up a little bit on the week chart. So, this would mean that it where it's at right now, right? Hovering over at the 4.1 mark, that corresponds to this 38% retracement level. And that 30% retracement level is 25.4. You can see it's hovering there. It's kind of hovering. It breaks a little bit and comes back up. It's hovering right over it. So for the 10-year, it's really important to pay attention. Does it start to creep back up to 4.4? And if so, the TYD will start to go down and probably break the 38% retracement support level. If it goes down and breaks the 4, then we should see this to get closer to the 26.13. But the point here is that the yield curve is not shifting down. The spreads between the 30 and the 10 are widening. And that's been widening since the Federal Reserve has been reducing rates in 2025. So we have some important things to think about for 2025 dynamics moving into 2026. All right, VIX. VIX volatility is very low right now. It's trading at 14.51, and you have these spikes. All right, so we had the 2024 year, we had the 2025 year, and then we're just getting started with 2026. All right, so the big spike that took place in November, late November, was approximately, about 27, all right, for the VIX, and then it came back down. And normally these periodicities, these spikes, are about a month, month and a half, 2 months, right? Depends on how you want to look at it, all right? So there was two big spikes here, one in October and one in November. The October one is in the middle of October. In November, it was near the end of November. So we're talking about maybe about 5 weeks from one spike to another, both just below 30. And then it dropped down. Now, this volatility being down so much primarily was because of the end of the year. You see here the end of spike volatility did spike in 2024 higher. But okay, but the point I'm making here is that usually the spikes are every 2.5 months. All right, so you want to take a look at this. Was kind of a rarity, seeing at 1 month, one right after another. But look at this. You have this one spike, 1 month, 2 month, 2.5 months. See, that's normally the signal you start to see. 1 month, 2 months, 2.5 months. Okay. Now, if you see spikes every 2.5 months or a month or whatever, or even 3 months, and they're getting larger, spike to spike, peak to peak, it's increasing, then there's a higher probability that in the short run that volatility is going to get even higher. And that's what you see here. Volatility went from here, just below 30, to 30, all the way to 60. Now, this was the tariff issue on the 2nd of April. All right. And then it came back down. But here you have a spike and another spike. So that's about a month. And then you have a month and a half, another spike, and another month, another spike, but they're all lower. See that? They're all lower, 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 lower. And then it started to come back up. And then you had these two additional spikes, October and November. And it came back down. So I suspect that in a 2.5 month time frame, we're going to have another spike. Now, the question is, will it be lower or will it be higher? If it's higher than this, then I'm worried. If it's lower, then we should be okay in Q2 of 2026. So this happened in November. So December, January, middle of February is probably going to be another spike. And if that spike is lower than this, then we should have a good to second quarter of 2026. If it's larger, then we're going to have some volatility. Now, this coincides with a lot of funding through the discount window. And the discount window funding started in June. So what was going in June? June, we had a little bit of a spike here. There was other funding in September. And we also had November and December funding. All right. Now, the volatility didn't show much with that discount window. So this discount window recently had individuals, co companies that have access to the discount window for the Federal Reserve, they had some liquidity issue. And it's in the tune of 19 billion in some cases, 90 billion in others, so there was a lot that was requested overnight. I would not be surprised that there is a large volatility spike in the middle of February. But it could happen near the end of January. And it's important to realize that will that volatility spike be higher than 27 or not? If it's higher than 27, then we're going to have additional stress that may lead to problems in the market. And that would mean that the S&P 500 will start to come down. All right, so let's think about this with the 2.5 month periodicity of the VIX. Based on the November data of 2025, there's a higher probability that by mid-February, we're going to see a spike of volatility. That volatility, if it's more than the November volatility, then we have some problems going into the second quarter of this year. And if that is the case, then we should see the S&P 500 start to drift down and test the 660 level, maybe even the 640 level. Now, if that volatility that spikes up near the end of January to mid-February is less than the November volatility, then we should see sideways trading closer to a range of 670 to 690. And then once the volatility goes back down quickly, then it's going to test the 700 and go past the 700. Okay, so back to the volatility here. I suspect that there's going to be a volatility spike at the end of January to mid-February. And we need to know, is it higher than 27? Is it higher than the peak of this? If it is higher, then we're going to have additional volatility and additional downdraft on the S&P 500. If it spikes only to 20, and then comes back down, then we're talking about at least a rally in Q2. So pay attention to that. I'm a little concerned about what's happening with those banks, those institutions going to the discount window at the Federal Reserve and asking for all that money at the very end of the year and at the beginning of this year, because there was also a big ask or big repo that took place on the 3rd of January of $19.5 billion. We don't know the details and who that was because the Federal Reserve doesn't publish that. But the bottom line is it happened. And there's no volatility that's in conjunction with that. So, what's really going on? Is the discount window data hinting at volatility to start spiking in the end of January, mid-February, beyond this point? It could very well mean that. We just don't know. But I suspect that volatility is going to spike and that there is a decent probability that it will peak. It will go beyond this and maybe hit 30, especially if there's some issues with some interbank lending. So it's not so clear cut on how things are going to play out in Q1 and Q2. But pay attention to that volatility spike. There's a volatility spike that's going to be coming here. And again, it happens usually every 2 months, or it can happen in a month period. But 2 months, you're talking February, mid-February. So you have December, that's 1 month. Mid-December is 1 month. Mid-January, right? And so now you're talking February. You're talking, beginning of February to mid-February, but it could also happen at the end of January. So it just depends on what, I suspect there is some sort of spike that's coming. You can see here, small spikes happen every month, right? And you have these bigger spikes that happen. These bigger spikes may happen like here. This one here happened in half a month. Half a month. A little spike here, half a month. But if you look at the big spikes, here we have a month, but they're not that big. You're only talking, anything below 20 is small. All right. But if you have a big spike here, 25, all right, and then you can kind of see that they come up and come back down. Like this structure is different than this structure. So this structure to this structure, right? One, two. It's like 2 months plus a week or two. So that's 2.5 months, or close to 2.5 months. All right. This is a small spike because it's under 20. But here you have a 1 month, but then you have this spike. And what's happening? 1 month, 1.5. If you take it from here to here, this structure is a little different than this structure. One, right? Right. You take this 1 month, 2 months, 2.5. See my point? So I look at like 2.5, 2 to 2.5 months as a window, but it can happen in a month period. Like here's a perfect example where it was a month where you had high volatility, came back down, and then high volatility again, and that was in a month duration from peak to peak. So you can have month peak to peak, but it usually goes back down, right? So you can see this, you can see VIX spikes up, comes back down, things tries to stabilize, but it's still a little volatile, then spikes up again. And if it's an upward peak to peak, then high probability of it'll become even more. Here's a perfect example. Peak to peak, and then boom. All right. This was peak, 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 didn't go back down, didn't go up, came down, and then all of a sudden a spike at the end of the year and came down. Peak, peak, didn't really go down, and then spike back up. So you want a downward trend. And this is slightly down, so we may have a spike that's lower, and then we're good to go in for Q2 of 2026, but we'll have to see that. But I I suspect that something is coming in January, into January, beginning of February, with a spike of volatility, which would bring the market, the S&P 500 down. So with that we've covered some of the charts here on Bitcoin, on S&P 500, on oil and natural gas, on the belly of the curve, the 7 to 10 year, and the federal funds rate, and the spread between the 30 year and the 10 year, and the VIX index. So please help support the work that I do by sharing the links, by asking your social media to follow me. There's lots of ways to follow me. You can follow me on YouTube, Brighteon, Bitchute, and Rumble. You can help support my work by donating on my website. You can donate through Stripe, PayPal, or Buy Me a Coffee. You can also be a paid member to my Patreon channel and my Substack channel. I publish news and my videos all for free. I have thousands of videos for free. Please help support the work by going to my website, donating, sharing the links, following me, and better yet, get the products that I offer. They will help to boost up your immune system and slow down the aging process. So please go to my store, the-studio-reykjavik.com. Thank you for listening and have a nice day.